Okay, so in other words, what happens on a daily chart will happen on a 4-hour chart, which will happen on an hourly chart, which will happen on a 15 and a 5. Right, so this is valuable information for us. Okay, and really it looks something like this. Okay, let's say that this is a daily chart. Okay, and this daily chart does a little higher low, changes direction, and up it goes. All right, let's isolate. So this is daily, D1. Let's isolate this little area here. Okay, and I'm not an Elliott wave guy, but I know that a lot of what I look at is Elliott wave just by default, by coincidence. All right, so that's fine. But I don't count waves specifically. All right, so let's look at this red square here now on a 4-hour. So a downtrend is a series of lower lows and lower highs. It's a very common, very simply used statement, but about the most powerful thing that you have technically in your toolbox, with other than support and resistance. And an uptrend is a series of higher lows and higher highs. Right. So let's look at this red piece here on a 4-hour chart. We'd be making lower lows and lower highs. That's interesting because this daily portion looked like that too, but we're only looking at this part now, right? We're only focusing on this, which is that. Right, please stick with me today. I know it's going to be, this is very intricate, pretty complicated. I mean, it's simple in its conception, but you need to pay attention here. This isn't one that's just going to filter into your noggin. All right. So when we get to the bottom of this, the 4-hour then will affect a little change of trend, which we know to be a little higher, low, higher, high. Remember our down to uptrend changes of trend. We've done these before. That is a higher, low, higher, higher scenario. Okay, the other one is one of these where you make 2 lower highs and then you breach both those lower highs. All right, that by definition is a change of trend. And then the other one is simply a little double bottom change of trend. Very similar to the first example. And obviously the reciprocal applies to the downside. So in other words, this would be this by example. Okay, in which then, you come all the way down because chances are you're hitting a decent little swing resistance on the daily, and you push up to what would be a red zone on the daily. And what happens? Price does something like this. Okay, now the tricky thing is people will get caught trying to buy through here because they're not watching the daily chart. And meantime, the daily chart is exactly at, say, a 2 or 50% or previous resistance. And then you get bamboozled buying here because you're in a 4-hour uptrend. Meantime, you're categorically in a daily downtrend still. And all of a sudden, you've got buzzsaw happening here all the way down to what is almost a double bottom on this 4-hour. Now at this point, maybe this is daily support, and now you start to see a bottoming out effect happen, on this 4-hour chart, which is this swing low. This is ideal sort of scenario. Double bottom, higher low, break the last 2 highs. That's the one you want to pick up aggressively and go with. Okay, now the crux of these things is obviously where this is happening. Is it happening at daily support? Is this resistance? Right? And when this breaks, where is it going to? Well, it's going to the next level on the daily, and then it's likely to come down to the support, in which case you're going to look for sort of something like this again. Okay, this is the stuff that it's these little changes of trend cheat sheets here that I kind of live and die by. This is a quick sort of example here. Are there any questions on this so far? All right, I think that we should just dive immediately into a chart, go through it nitty gritty, and I think a lot of this lesson will come to light. Right, so how do you combine time frames? It's a simple question, and one of these things that is not that easy to answer, isn't it? Because if you look at, I'll give you an example. Let's take a look-see at the pound. In my mind, this takes a long time to develop the skill to be able to sort of see or conceptualize how this all plays in. You know, for example, I look at, we'll come right back to pound, and I know there's a lot of lines on that chart because it's a monthly, but take a look at this Mexican peso monthly chart. Okay, I don't have all the data here on the left, but this thing's in the moon here. So it's likely in my mind that this zone, and it's 40 cents, I mean, it's serious. It's a monthly chart we're talking about. It's likely that this zone next month creates a candle that looks like this. The little wick up here. Okay. And this sort of 5 EMA will come like that. And this 21 will sort of pop up like this. So you're going to be the furthest when it starts away from this 21 that it's almost been historically ever. In fact, I think it is right now. All right. So that's a monthly chart. So what will that look like on a weekly? It's likely to look something like this. You know, then like a little tricky little candle. Maybe it looks like that, with a little red on the bottom. And then this one sort of kicks up, it makes a low high. And then you get another sort of wicky little candle that doesn't really mean anything. And then the next one goes, thanks. Pull back. Pull back. Right? Now we're into that monthly zone where it hasn't even seen the 5 EMA or any reasonable support for a while. And this looks bearish. I mean, these stochastics are going to be rolled over. This is going to be like, oh yeah, this is hard down. Meantime, you're running into a buzzsaw on that monthly. Next thing you know, you got this going on. At least back up here. And on the monthly chart, remember we had that red candle, and then you'd have the green candle, which is this on the weekly, all the way up there, which is effectively this on the weekly. So you've used the monthly chart. I know I'm using big time frames there. You've used the monthly chart as a heads up to say correction coming. Don't know exactly where. Then you've gone to the weekly chart to look for clues on the, clue train. And then you can go to your daily chart for execution and say, all right, the timing's right.